The ASX 200 finished down by 3 points. At face value, it doesn't seem like much of an achievement, but when you consider that the market was down by around 33 points, at its worst levels of the day, it was quite an encouraging recovery, and most of that came at the hands of the banks, which recovered from their worst levels of the day, but it was still a pretty mixed picture for the big lenders. The CBA was up by only 0.25%, and that was balanced by a 0.25% decline for the ANZ. Today we saw Macquarie Group shares down by more than 2.5%, and that was on news that the CEO, Nicholas Moore, would be stepping down. Elsewhere, as far as the mining stocks were concerned, it was a mixed picture. The bulk iron ore miners were lower. Particularly what stood out here was Fortescue Metals, whose shares were down by more than 3%, which was a counterintuitive response on the back of its production numbers today, which were quite strong for the last quarter. We saw record production and costs fell as well, so they were marked down pretty aggressively. Rio was down by more than 1% as well. Worth talking about gold mining stocks because they actually did quite well. Northern Star was up by more than 4%, and Newcrest Mining was up by the most part of 5%. Their production report for the last quarter was at the upper end of expectations, so probably as much as anything else, a bit of relief being seen in the share price there. Elsewhere, some big movers in previous days found their footing. Kogan shares in the previous 2 days have lost around 11% on consecutive sessions. Today it was at least a relief to see the stock in positive territory, albeit modestly, with a 2% gain. Medical Developments was a stock that got marked down aggressively yesterday on news that they have seen a hurdle emerge in the form of the FDA for their approval of Penthrox in the US. Today the stock was up by 1.5%. The other big news story of the day, of course, was the acquisition, if you like, of Fairfax by the Nine Entertainment Group. It's been said that perhaps Fairfax shareholders are getting the better end of this transaction. They'll receive just under 0.4 of a Nine Entertainment share, in addition to 2.5 cents cash. There's going to be an estimated $50 million worth of costs taken out of the business over the course of 2 years. It's been seen as being earnings neutral for NEC, which is part of the reason why the stock is down by around 10%, but Fairfax shares are up by 8%, and there was a 9% improvement for Domain Holdings. Elsewhere, the Aussie dollar firmer at 74.7 US cents.